Yo, what's up, guys? So this is gonna be my first video about probably my understanding of just basically the market and like candles and all this stuff. So I have a bunch of notes written down about just explaining like literally everything. And the reason I'm doing this isn't to teach anyone or isn't to like show anyone how to do it. Like I'm not a professional. I'm still learning. I'm mainly like trying to like show you guys what I do and how I understand it, so I can along the way learn and hopefully get you guys' feedback and like slowly start building up my progress. But I mean, first things first, I think like the way I'm gonna do this is I'm probably gonna do it like I'm gonna do sections basically because I have so many topics I wrote down. Like I don't even know how I'm gonna get to it all, but I'm gonna do like maybe one small segment about 5 minutes, 5 minutes. Maybe if this is like if it's a bigger topic, maybe like 10 minutes. And like I'm gonna like depending on like how important the topic is, I'm gonna make it longer or shorter. But for now, let's start with how I understand candles. So, what's this one? For me, candles are just like opens and closes. So if let's say that, oh my god, all right, it's gonna be harder than I thought. Wait. Oh, let's go. So like one candle, for example, something. Oh my god, what is that? Oh, 30 minutes, bro. Why is this so squiggly, bro? There we go. All right, so usually how I see candles are bam, 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 bam. Damn, that's a horrible one. So how I see candles, depending on what color it is, the open and close are like basically flipped. So if let's say this is a green candle, so like if we color it in green, just imagine it's a green candle, right, guys? The open is the low right here, and this is the close. And at some point, price went down into this area, then went up into this area and came down. Or it could be the other way. It could have went up, down, up here, came back down, and then went up and closed above the initial price that it opened at. Now, a bearish candle, which is basically just flipped, would be, let's say this is a red candle, would be flipped. So it would be, it opened here and it closed here, and at some point price was in this area, and at some point price came down to this area, and eventually it closed lower than it opened. So that's literally as simple as it gets with candles. Now there's obviously different types of candles. There's like hammerhead candles. There's different ways to identify candles and like just help your trading. I never really believed in like individual candlestick patterns, but some people do. Some people believe in it. Some people use it to trade. But that's simply candles, to be honest. Super easy, super simple. If we like look at candles, like it's the same thing. Like for example, this is one very long bearish candle. Price opened here, came down here, and at some point it was in this area and then this area, and it closed lower than it opened. Same thing with a bullish candle. Price opened right here, some point it came down here, came all the way up here, and then eventually closed above the price that it opened. Super simple, super easy. I learned this in like maybe like an hour, like just looking at it. It's very simple. You just got to keep looking at it, going through candles, go through charts, looking at candles and identifying it. It's super simple. But yeah. All right, next part, and then now I'm gonna talk about the next part, but I'm gonna pause the video. Next topic that I think I'm gonna talk about, it's kind of like a step above candles, and it's trends. Now, trends are super easy. It did take me a bit to understand it and like find highs and lows, but basically what a trend is, in my opinion, is a high and a newer high being created, and a lower low being created. So if you think about it, like let's say like something like, bam, this is the high, this is the low, this is the higher high, this is the higher low, higher high, higher low, and it's the same thing vice versa. Let's say it goes down like that. Oh my god, that's horrible. But you can kind of imagine it. With a downtrend, it's lower lows, higher highs too, but it's flipped basically. So higher high, higher low, lower high, lower low, lower high, and let's say we went like up a little, lower low. Super easy. Downtrend, uptrend. There's nothing really to talk about here. It's just basically you guys will be able to identify, you know. So, like for example, say let's find the trend and identify. So like, and to be honest with you, trends are everywhere. 1 minute chart, 5 minute, 15 minute, hourly, daily, anything. It can be literally anything. So let me show you how to do this. So let's start with here. So higher high, higher high, and higher high. Easy peasy, right? Now lower low, lower low, and where would the next low be? Well, it'll be a break of structure here, but we'll get into that later. So it'll be right here. So if you look at it, higher high, higher high, higher high, lower low, lower low, lower low. Super easy, and you can tell that it's an uptrend. Easy peasy, lemon squeezy. Now, let's find a downtrend. I'm gonna find like a general downtrend, something like. Probably missed so much. Bitcoin's been cooking lately, so I'm not gonna lie. We can find on the week, daily. Sure, we had a fat downtrend. Somewhere right here. Bro, do we not have any good downtrends? What about on Ethereum? Ethereum probably had a horrible day at one point. Alright. I see a good one here. So, good example here. Higher high. Then there would be another higher high. And then there would be another higher high. Now vice versa. There would be a lower low right here. There would be another lower low right here. And there would be just a crash. The next lower low would be, damn, down here. So, exact same logic here. Exact same logic. Higher high, lower high, lower high, and I'm missing another one. It'll be right here. Right here. Yeah, right here. So wait, let me. So higher high, higher high, higher high. Lower low, and then the lower one was down here. Super simple, can tell it's a downtrend. Simple as that. Next topic I think that we have to talk about is break of structures. Now, break of structures you can literally use in trades. That's what I've seen. That's what I use too. And a break of structure is basically identified. Wait, no, my bad. It's basically used in a way where like you can identify if a trend is being broken. Super easy. So what I mean by this is, let's say we're in an uptrend and we break this low right here, and that is what signifies a break of structure. And it's same thing vice versa. We're coming down and we go up. As soon as we break this high, we broke structure. Super easy, super understandable. If anything, it's just basically a break of structure. So for highs, if a low is broken, and for downtrends, if a high is broken. Super easy, super simple. And these are everywhere, like genuinely everywhere. Let's go to I already see one, but let's go to the 15-minute one. Actually, no, let's go to the higher one. Go to the hourly. So let's say right here is a good one. So break of structures kind of tie into trends and identifying trends, but let's go. So we are creating higher highs. Bam, bam. There's another one here, and there's another one here. It's a big uptrend, right? And we're creating lower lows. Bam, bam, higher lows, sorry. Bam. There's another one here, and then we have one right here. All right, so identifying it. Higher high, higher high, higher high, higher high. Lower low, lower low, lower low. And now, this low right here, so you can kind of imagine it going like bam, 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 bam. Let's just say it goes up here. Now, to know when we break structure, we have to see price break this zone right here. So you can see price broke it and it reversed. And you can tell along the way the trade eventually went down and created lower lows and it just kept going. Eventually it reversed, it went back up, but you can identify that high later. But it's super simple. Break of structure for a bullish trend and it breaks the lower low. Super easy. Now, for downtrends, it's very similar. Well, let's find a good one. Say right here. So, the high, and this is technically the low too. The high, the low, and the low, the high. Bam. Higher high, higher high, lower high, lower high. Lower low, lower low, lower low. Super simple. Very similar to this. Bam, bam, bam. And we have to break this price right here. Right? No, the break price right here. So you can tell this is the higher high with the candle going up, down. This is the highest point. So as soon as we break structure on this candle right here, where it went above, it closed above this lower high, is a break of structure, and you can tell eventually the stock went up. Now this isn't, you can't trade just purely off of this because that's how I started. I would be just like, oh, I see a break of structure, let me hop in the trade. But it's so much harder than that, and there's so many more like stuff that I feel like you have to add on to it, because if it was that easy, anybody could do it. But yeah, uptrends, downtrends, break of structure. It's super easy. That's how I see it, and that's how I understand it. So I think that this is gonna be a good stopping point, because the next two stuff that I want to explain and talk about is order blocks, fair value gaps, equilibrium. I'm starting to like get into on all these other like inverse fair value gaps. I don't want to start that right away, and I want to like fully understand that before I start teaching it and like trying to explain how, because I barely understand. Like, how am I going to teach other people it when I can barely understand? So hopefully this video motivates me to keep learning more and more about it. And when I think I'm ready, I'm probably gonna make a video about it. But next up is probably gonna be order blocks, fair value gaps, inverse fair value gaps, breaker blocks, and basically all this like. It's a little bit harder to understand, and it's even harder to explain what it is and how it works. But that's basically what I'm gonna do. I think this is a great stopping point, because this is basically the beginning steps of how to become a good trader, in my opinion. And what I did when I first learned these was, before making any trades, I would literally just go on any chart possible and just find these, like find every single one on like the hourly, on the 4 hours, and the daily. And I was continually just like keep looking for it, especially with fair value gaps. Fair value gaps are very prominent. Same with order blocks, and most of them are literally in any time frame. Like it could be low volume, there could be like 5-minute time frame, 1-minute time frame, even they're literally everywhere. But I'm probably gonna make, between this first video and the order blocks and all these other stuff, in the middle I'm probably gonna make a psychology video on like how I, like more about like how I started trading, like why I'm trading, and like what I think you need to like stay consistent and profitable all at once. So I'm probably gonna end up making a video about that. But for now, I'm gonna just keep practicing these and just keep learning along the way, and hopefully my teaching is good. Hopefully you guys understand everything, and if you guys have any questions, or if I said anything wrong, please correct me. I'm so down to criticism. But yeah, thank you guys very much.